Chatting there about V-shaped recovery, and you're seeing a bit of a recovery, but not plain sailing though for your group, although you have come through quite strongly.
Yes, thanks Stephen. Yes, that's correct. We've had a good year, tough trading conditions, but we're happy with the results. And looking forward, I think it's much of the same. There are no indicators in the market to tell us that anything major is going to change in our game, so we expect much of the same going forward.
Well, you mentioned that final dividend up 23.5%, so that sort of indicates the kind of confidence you have in this market. Cash generation pretty strong from your operations, in fact, at a record high of 627 million rand. Now, are you seeing that continue in this environment?
That's very much a function of our working capital cycle. We were able to manage that quite well in the past 12 months. But we expect to stock up a little bit in the coming months. You know, with a strong rand, it's always good to buy a bit more stock. We are seeing price increases coming through from our suppliers as well. About 95% of our product comes from abroad, so we're very sensitive to the rand. So likely you'll see a little bit less cash generation in the coming 12 months, largely because we'll be putting it into working capital. It does help us, of course, sitting with, let's call it, cheaper stock. When the rand weakens, that does translate into better profits for us.
Well, in fact, you have been stocking up over the past year. You mentioned in the commentary today that particularly in your bearing man operation, stocking up on goods, and that sort of shielded you also from the effects of the Japanese earthquake. Do you import much of your materials from Japan?
About 21% of the group is imported from Japan. The bulk of that sits in the BMG group. A little bit in our capital equipment, but the bulk sits in BMG Group.
Well, you mentioned the strength of the rand helping you with those imports, but it also hinders you, though, with some of your sales, doesn't it? Because many of your customers are manufacturers who are exporting, and with the rand at current levels, demand falls for these products.
Yes, that's 100% correct, Stephen. You know, per definition, if one is selling one item and you have an export price, a rand equivalent of 100 rand, and the rand strengthens, you still sell that one item only, but you sell it now for 95 rand. So the rand income for the bulk of our customers is slightly depressed in a strong rand environment. And that translates into a little bit less enthusiasm for our price increases, which we might pass on, or enthusiasm to buy more product from us. So all round, it's not great for our environment, but it has been built into our base now. So, you know, we move forward from here.
Well, Arnold, we're going to be chatting about PMI numbers a little bit later and the manufacturing sector, the health of that manufacturing sector. I mean, yourself in this industry, what sort of level of rand would be ideal for you? A company that has to import components but also has customers who are exporters.
I guess that's the million-dollar question, isn't it? Look, I would say in the current environment, a comfortable level for the rand is probably 750 to the dollar. You know, so we're not far off that. It depends on which guru you listen to. Some gurus are saying that on a purchasing power parity, the rand is correctly priced. Nevertheless, you know, it's a reality of our environment. We've lived with the vagaries of the rand in our group forever, and it's no different at the moment. It just means that one plans a little bit more carefully in a volatile rand environment. So I would rather see a stable rand environment as we're in than one that is all over the place, because then it's really difficult to predict and plan properly.
Well, we chatted a little bit about Bearing Man Group, and of course that makes up 63% of group operating income. How about the Capital Equipment Group? How are you seeing it there? Because here you are supplying to the agricultural sector, also to the construction machinery sector, and I should imagine these are recovering at different speeds for you.
Yes, they are indeed. About 25% of the capital equipment division's turnover comes from construction equipment, and the balance from agriculture. And construction has been completely shot out as an industry in South Africa, the construction machinery industry. It has shown signs of recovery, albeit slow. So at least that's positive. We took steps in that particular division to cut costs, and we have reaped the benefit of that in the past 12 months. On the agricultural side, there's definitely more enthusiasm amongst the farmers. The weaker or the better grain prices have injected a bit of enthusiasm into the market. And the rains have been good, probably too good. So there's a sense of good optimism in the agricultural market. So all round capital equipment for us is a nice space to be in for a change, rather than a difficult space.
Maybe a quick word on Toria. This is still a small business within the stable, but you are spending on expanding distribution over here, investing in infrastructure at Toria. What are the prospects for this division and going forward, and also just for the current year for the entire group?
Okay. Just on Toria, the market at the moment in the building materials game is tough. That you can pick up through the peers in the industry that are listed. Toria has expanded. Expansion often is expensive because you tend to invest a little bit in your expansion and your existing operations are neglected slightly. But having said that, we've grown the base nicely. I would say that Toria in the next 3 to 4 years will become a material contributor to the group. It's also ready now to start looking for some sort of acquisition growth rather than a little bit of building growth through branch network. The industry is suffering at the moment a little bit, so the competitors in the industry are also tending to show signs of weakness and stress, which always leads to good acquisition opportunities for us. So we expect, not perhaps in the next 12 months, but certainly in the medium-term future, a decent contribution from Toria.
Arnold, I'm afraid
to answer your second question on the group as a whole, I would say that we are cautiously optimistic. Conditions are fairly predictable at the moment. It's not boom time, but it's also not down time either. So I think we've come out of a recession period as a group well intact, well prepared for opportunities going forward. And we've got a good base. We have good management, good products, good reach into the country as far as distribution is concerned. And for us, it's business as usual. So I think we look forward to a reasonably stable year unless there's some world event that overtakes us.